So what do we have here? We have a ranging market, and I'm about to do a put trade because we are facing a market range now. As you can see, the Bollinger bulge, what I told you about, look at it at the bottom, it happened, and now the market is going again into a range. I told you after the bulge, what you see is flat Bollinger band, and as you can see, after this phase of the market, the Bollinger band is now getting flat. And when there is a flat Bollinger band, what strategy do we switch to? We switch to support and resistance strategy, and this is what we have here. This is after this retracement back to the middle Bollinger band, we had a high. It came back down, we had another high, which is now a confirmed resistance. And when price came back up there, what I did, it's a put. It's as simple as that. Very, very simple. So I hope you understand what I have done now. This is a simple way to confirm your support and resistance strategy using the indicator as a volume guide. We can see now that the volume is high because the indicator is flat. This is what confirmation is all about. So let's go to another trade. AUD USD. Let me AUD. Okay, let's continue our trade. And now what we have again, as you can see, this is a low. Now it has been confirmed as a support, so therefore I want price to come back down again. The only reason I will do this trade is because the Bollinger band once again are flat. So when price comes back down here again to this zone between this line and this line, then it will be a confirmed what? Resistance. Now after this first touch of the resistance, second touch and the third touch, we might not be using it again because it can easily break out, but this is just the first and the second touch. So definitely if price comes back down here again, we will be using it because this is where it will most likely hold as a support. So this is what trading is all about, waiting for the right moment and taking your opportunities. Now the trade is going on too fast, so I'm going to pause this trade now until price gets to our place, to where we want it to be. Okay, the price went up there and it's still acting as a resistance. Yes, it's still acting as a resistance, maybe because these 2 weeks were not really candlestick bodies, so it acted again as a resistance. No problem. After now I'm going to do a put. Oh, okay, I did it at a bad entry, but nevertheless I'm doing this put because this is an engulfing candle and I can see an anomaly between these two trends. That means this trend is not strong and we had a reversal, a very short term analysis, so the market will be going down further. So if this is your first time seeing this video, please subscribe to this channel. If you've been a subscriber, please like and share this video so that this video will reach other people who are interested in binary option and forex and price action, volume and price analysis. Thank you. And if you also want to get the ebook is available now. You can see it here. It has every concept you would need to become a consistently profitable trader. It has candlestick patterns, it has momentum, it has trade setup and market analysis and everything. You can use it for every kind of broker, pocket option, IQ option, quotas, or other broker, or time frames, and you can use it for all market like stock exchange, ETF, binary, forex, commodities. Okay, now let's go on to the last trade using this AUD USD. Okay, excuse me. Okay, let's go on to the last trade. Now I can tell you the only reason why I'm doing this trade is because the Bollinger band is still flat. So after a flat Bollinger band, we have what? we are beginning to get a Bollinger squeeze. As you can see, it's just like a bulge in a range in a trending market is happening again. This Bollinger band is coming up, it's coming inside again, so the price is most likely to break out. Is most likely to break out, just like what we had here when it was coming inside. We saw this very short-term breakout before a new bulge. So I will wait and see what we have. Okay, this is a tricky market, so we have to be careful with the way we trade. So this should have been a good place to do a buy option, a higher option, but I missed that because I was announcing the ebook and the subscription. So let's just wait a bit and we'll get that. Okay, before then I'll go back and explain, since there is no opportunity coming, I'll go back and explain the trades that we took, what's happening. Okay, for this trade, okay, let's start from here. For this first trade, like I told you before, we had an uptrend. Let me see. Okay, we had this uptrend, and this uptrend was happening at the same time the Bollinger band was going up, but the price wasn't going up. As you can see, the price was not going up. What happened is that the candlestick will always go back. Now, if this is a strategy on its own, the price going up, the candlestick is not going up, you can see it's a strategy on its own. So in this case, you can do, this is not among this trade. I've said this before. I'm just saying, in this trade you can do 3 to 5 minutes puts and you will be in the money. But let's go to today's trade so that I can show you how the Bollinger band was happening, how the Bollinger band is confirming this. Now after this bulge, you see that the Bollinger band went into a flat, from this bulge to this flat, from this bulge to this flat. So whenever you see a bulge, the next, and you do this trade, the next thing that should come to your mind is what? A ranging market. And this is the ranging market, in case you've not known. And in a ranging market, the best strategy to follow is the support and the resistance. So after the bulge, you immediately look for a high. This is the high. You immediately look for a low. This is the low. Now we've gotten a high and a low in a new market condition. You wait for the retest of that first high. This is it. And you wait for the retest of the first low. This is it. When you see this retest, you know this is a confirmed resistance and this is a confirmed support. So whenever price comes back there, you can do your put, and whenever price comes back down, you can do your call. So that is what we have there. So for our next trade, what we had was, now we've had this confirmed resistance, and I was thinking the price is going to break out, but when price came back here, I saw this reversal pattern here, a dark cloud cover. So with this dark cloud cover, I went with a put, but I didn't go with the put just because of this dark cloud cover. I went with the put because of these two candlesticks that has an anomaly. You can see this candlestick is bigger than this candlestick, but this candlestick volume is bigger than this candlestick volume. The first is bigger than the last, but the last volume is bigger than the first, which is not supposed to be so. So what's going on here? It's an anomaly. It's showing that the movement of this market is not legit, and the reason why it's not legit is because there is a resistance here. This is trying to tell you, hey, there is a resistance here, but it does not mean you should do a put. But when the reversal pattern appeared, this movement that is not legit, plus the resistance, plus the reversal pattern, they are all saying one thing: go into the market and do the put. You understand? This is now a put. Now the market came back down, and from here we can see that the market is going back up again. This is to show you the power of this resistance level. This is to show you the power of that resistance level. So you can see that this resistance level is very strong, The next time price came back down, this candlestick, this red candlestick here becomes what? A hanging man, a red hanging man, and the price goes down. So I hope you've understood the way the support and resistance is being formed, the way you should relate with the Bollinger Band, and the strategy you need to adopt whenever the market condition changes. So until next time, subscribe to my channel, like this video, and share my video. For now, I'll say bye bye.